So experts say there's zero chance of affordability returning to the Toronto real estate market. And in this video, we're going to break down where this data is coming from. And I'd love to hear your thoughts on what you think is going to happen in the market as we move through the fall. I'm Michael Ouzas. I'm a realtor in the Greater Toronto area. If you ever have any questions on what I've been seeing on the ground level in the Toronto real estate market, click on that first link in the description down below and book a discovery call whenever you're ready. So over on BlogTO, it says experts say there's zero chance of affordability returning to Toronto's real estate market. Now, they took this data from a Desjardins economic viewpoint, which is titled, "How Low Can Prices Go in TO?" Even a severe recession likely won't make housing affordable in Toronto. And the summary is right here, and we can go through a couple of these points. So it says, after years of being priced out of the market, many prospective Toronto homebuyers now sense an opening with a recession looming. But even in the direst of economic scenarios, we don't see affordability returning to Canada's largest city anytime soon. They laid out a couple different scenarios, and the worst case scenario is a 1990s style Ontario recession that would drive average Toronto home values $185,000 or 16% below current levels by the end of next year. So by Q4 of 2025, prices would sit $340,000 or 30% lower than they did in July of 2023. And this is the table here, and comparing the percentage drops of where things will be for next year. It also goes on to say that if the improbable outcome were to materialize within the next 3 years, it would only bring Toronto's home price to per capita disposable income ratio back to a still stretched late 2015 level. Such a significant price decline would likely come at a massive economic and social cost. Compared to our base case Ontario forecast, the 1990 style recession will result in more than $35 billion reduction in employment income and almost 500,000 total job losses by the fourth quarter of 2025. Interestingly enough, they ran through a bullish house price trajectory and said it's also possible. The most optimistic scenario with current homeowners sees persistently strong population growth and limited numbers of new listings, lifting prices above the February 2022 peak by early 2025. The analysis goes through the difficult starting position for both first-time buyers and policymakers seeking to improve housing affordability, and plans to boost a supply of affordable housing can't fall short, just not an option. So there's a few things that are always interesting when looking at these articles. And the first one is where they're getting their data and what they're comparing it to. So if this article is taking the 1990 style recession that we saw here in Canada and applying it to today, it's still saying that even in a couple years of a significant recession and significant job loss, that prices will only be $340,000 or about 30% lower than the average price today, which is just over $1.1 million. And that's at least for the July number that they were using for this report. We know that August numbers were different than July. The other scenario they played out was that prices would increase past the February 2022 pricing of $1.3 million by the end of Q4 2025. And I found that interesting that they played both scenarios out on to where things would be in Q4 of 2025, which is 2 years from now. Now, if we jump back to the BlogTO article, it says, unfortunately, their outlook doesn't seem promising for anyone still holding on to the dream of securing a place of their own in the nation's largest city, no matter what lies on the horizon as far as interest rate hikes or economic collapse. Now, as we've gone through the fall market, it's been interesting to see that more and more listings have been coming to the market, but there's a couple things that I've been noticing on the ground level. The first thing is that there is inventory out there. And if you're looking for a great property in a very desirable area in the city, I have seen multiple offers still happening on those properties, even though the prices are not exactly cheap compared to where they were, especially when we factor in interest rates. Those types of properties still seem to be selling pretty well, depending on how they look inside and how the renovations look and how they show overall in general. As we head into October, it'll be interesting to see how things play out if more inventory keeps coming to the market and what they decide to do at the end of October on the next rate announcement. If you're a buyer right now, if I was to give any piece of advice, would be just to monitor the areas, buildings, and locations that you're interested in to get a feel for how fast things are selling and what things are selling for the exact property that you're looking at right now. And I'd also love to hear your thoughts on what you think of this Desjardins report and which way you think things are going to go, either up or down by the end of 2025. I'm Michael Ouzas. Thanks for watching.